think it indicates that the market is really paying attention to what Secretary of State Tillerson said, which is that this does not indicate a change in posture from the U.S. This is seen by the market, it seems, like a discrete event. And as with any geopolitical action, the market always focuses on the impact to the economy. And if it is indeed just a discrete action, then it doesn't have an impact on the U.S. and global economy.
It may be a one-time action, but as Joe was pointing out before, it certainly does send a much larger signal. This is a different way of viewing the world and dealing with the world, correct?
It may be. I think it's still too early to tell, and that's why the market is paying so much attention as well to the meeting with President Xi Jinping and the attitude towards North Korea, which is really the big focus here.
Seeing green arrows this morning, I mean, is that brushing off the airstrike, kind of giving credence to what they think may be positive talks with the Chinese president, and also thinking that the jobs number may be positive? How do you add all that up? How do you get to the positive numbers?
I add it all up based on the data we've seen this week. The most important number, I think, to me, to us, is really the global manufacturing PMI, which reached 53. It's a high for 6 years. That means that the U.S. economy is picking up, but it also means the world economy is picking up. It's a synchronized improvement that we hadn't seen in 6 years, and I think that's what's underpinning the market. It's not Washington, it's the actual improvement in economic growth. If
we are looking at economic growth improving, how come we're looking at the 10-year note today yielding the lowest levels that we've seen since November 22nd?
The 10-year has been taking a pause this year, right, after having rallied so far the last 2 months of last year. We think this is just a temporary pause. Exactly. There's a lot that's being overshadowed by politics. And once the market focuses back, the fixed income market focuses back on inflation and growth, and that 10-year number should be much closer to 3.5 by the end of this year.
Michelle, let's just talk about where you see growth right now in the United States. This has been it was a very weak first quarter. Where are we now in the second quarter?
I think, as you said, Q1 was weak, but it's probably partly this residual seasonality that we all like to talk about, and it's happened the past several years. So yeah. I think we should see growth rebound into the second quarter, and the confidence surveys are indicative of that. And I think we should take these surveys with a bit of a grain of salt. They go up sharply, they come right back down. You know, they're kind of fickle, but you don't want to fade it entirely. So taking some positive signal from the strong survey data, the idea that you're going to have some rebound after residual seasonality hurt Q1 GDP growth, I think we'll be heading into the second quarter, into the third quarter with a little bit more momentum. That said, I do worry that optimism was just too high heading into the year on the basis that we'd see some significant policy changes.
Where do you think we'll see the jobs report today?
So we're looking for 200,000, which is a little bit above the consensus, and I'm pretty comfortable with that number. You had the ISM manufacturing surveys show strong employment series, so manufacturing job growth should pick up. The housing numbers are still strong, which should support construction, although the weather does play a role for construction.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.